Good morning, Alex. I think definitely, Alex, if you look at NESCO, I think the last 2 years have been extremely bad for the company, considering the fact that, the Bombay Exhibition Center, which it runs in Goregaon, Bombay, was completely shut down. In fact, most of its facilities was given to the Maharashtra government for COVID. But now, since effective today, with all COVID restrictions taken out, I think there's a very strong possibility that in FY23, the Bombay exhibition business will now get ramped up significantly. In the past 2 years, there was hardly any revenue, and we believe that on a full year basis, roughly 100 to 125 odd crores could come in from the Bombay exhibition facility alone. So I think definitely, if he's a medium-term investor, he could definitely look at buying, considering the fact that it still is available at attractive valuations. And I would believe that probably in the next 12 to 15 months, he could expect a price of around 675, 700 here. I think since he's a long-term investor, my suggestion is that he can definitely average out. It's a great business in the enzyme space. This company enjoys a market share of more than 50%, and largely, the product is exported. My sense is, with a weaker rupee and with traction coming back from the export markets, FY23 should be a lot better. Although the stock has not done well in the last 6 months, I would personally believe that he should not sell out in panic. He could average out at the current odd levels, and definitely in the next, say, 12 to 18 months, hopefully he should get a decent return. I would believe at least a return of 20%, from the current odd levels. No, I think my sense is, I think Eicher Motors should do reasonably well. They have a large presence in the premium motorbike segment. They have a large presence in the commercial vehicle segment, and it's one of the front leaders there. Clearly, I think, if the investor can hold on for the next 12 months, auto is one sector which is going to bounce back quite strongly, considering that a lot of infrastructure and a lot of discretionary buying is going to come in. Definitely, I mean, if she can hold on for 12 to 15 months, she can definitely hope to get a better price. I don't know her cost price, but as far as HOEC is concerned, this company has been in the limelight because crude oil prices have touched record highs. They've also started gas production from their Assam fields. So I think clearly the market is looking at better earnings numbers for FY23. So if at all she wants to buy, this decline for HOEC is also quite good. There have been some reports that there has been some delay in the gas supplies from the Assam oil fields for HOEC, and that's why the stock is down. But fundamentally, the stock remains quite solid, and one can definitely buy on decline. This has been a dream run, a very good IPO, and I think most investors must be happy that the most of them have made more than 100% gains. At least news reports suggest that Adani Wilmar is now going to be included in the F&O list very soon. So I think that could further trigger some sort of action for Adani Wilmar. And I think in all probability, they're also looking at some inorganic acquisitions. So despite the fact that it's moved up very fast, I would suggest, book some profits and hold on the rest quantity. Once the stock comes in the F&O list, you could see a lot of speculative buying coming in and some further re-rating coming in here. So I would believe that book 50% profit and the rest he can hold on. Yeah, I think Alex, she should hold on. There is a huge upside expected here, considering the fact that they've been putting a lot of incremental power generation capacity, and I think within the power generation arena, I think NTPC definitely has a strong edge in terms of their thermal as well as coal capacity. And I would believe that if she can hold on for the next 12 months, I would not be surprised that another, say, 10-15% upside would be possible, considering that there's now a new attraction for power generating companies. So definitely she should hold on. I think first of all, Alex, looking at the mix of the stocks, I could tell you that Ashok Leyland, Tata Motors are definitely good companies. Tata Tele, I think, has been a very speculative stock. It's moved up, significantly in a short period. Then again, we saw a lower circuit there. My suggestion is that in any companies, you tend to buy, please look at, the balance sheet quality and the business model. Buying stocks purely on news flows and news reports and rumors is not going to make money. And typically, when the entire story is known to everybody, that is not the time when alpha generation is made. And typically in large cap companies, if one were to invest, one has to keep a horizon of at least 2 to 3 years. So I think, you should have a mix of large cap and mid cap in your portfolios, but time horizon should be at least 2 to 3 years. Only then equities can make a kind of a significant amount of wealth creation for you. So that would be my advice to the investor here. I think without giving price targets, I would believe that this is one company which is going to be in the limelight, considering that this is also going to be an addition to the proposed new F&O list of stocks. As far as fundamentals are concerned, the company still has not made significant amount of money. I would believe that if the investor has got a at least 18 to 24 month view, then only I think he can take a call here. There's no doubt that company's performance is improving, but I think it would take a little more time. The stock has been extremely speculative, so I think keep a slightly medium to long term horizon, and you can obviously accumulate on every decline. So definitely, price target wise, value appreciation will happen, but obviously it would take a little more time. So I think he has to have a little amount of patience when he buys this stock. Alex, recently JNK Bank made a institutional QIP to institutional investors. So I think the bank is definitely getting its mojo back. As far as asset quality is concerned, the loan book is concerned, this is one bank which is primarily having a virtual monopoly in Kashmir. And I think looking at the kind of investments which are planned in Kashmir by many corporates, I would not be surprised that over the next couple of years we could see a lot of growth for the bank. So I think you need to keep a slightly medium-term view here. If he has a holding here, I would suggest him that please hold on for the next 18 to 24 months. One could definitely expect a reasonably good risk reward here. I think Alex, this company was earlier known as Orient Abrasives, and now the new name. I would believe that the kind of uptick we have seen in the manufacturing sector, especially steel and cement. This is one sector which is going to grow significantly, because abrasives are key raw materials for steel as well as cement sector, where these inputs are used in the furnaces. As far as the financials of this company is concerned, the best part is that now with the collaborator taking control of the company, the export opportunity is going to be quite significant. So I think if the investor has got a 2-year view, definitely one could look at even accumulating at the current odd levels, because there's hardly any fresh supply, hardly any new competitor coming in this space. So definitely long-term prospects here are quite bright. Yeah, I think both of them look quite attractive. In fact, ABFRL is definitely poised to do significantly better over the next 12 to 18 months. And I think Arvind has been an integrated textile player. Most importantly, they have a large presence in the technical textile space, which is growing rapidly and which is extremely profitable. Both the managements have given very positive commentaries, and our sense is that in this current year, that is FY23, you could see overall better improvements in terms of top line and profitability. So I would believe that even at the current odd levels, if the investor buys, he should definitely make a decent amount of risk reward in the current the market scenario. Yeah, I think you should hold on to Voltas with a very hot summer expected. I would not be surprised this company's stock price should do extremely well. Yeah, I think we should take at least 25 to 30% profits. He's made a decent amount of money, and I think the rest he can hold. I think he should exit and possibly look at some other pharma stock like Sun Pharma, where the risk reward is better.